welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures falling this morning as traders digest the latest updates in President Trump's trade war. Over the weekend, Trump threatened to impose 30% tariffs on the EU and on Mexico. Meanwhile, new reports say the European Union is preparing to step up its engagement with other countries hit by tariffs. That includes Canada and Japan, and could include the potential for coordination against the U.S. Plus, another record for Bitcoin, the digital token climbing as high as $123,000 as investors pile into the cryptocurrency. The rally coming as the U.S. House of Representatives prepares to consider key industry legislation during its so-called Crypto Week kicking off today. And a busy week for earnings and economic data as well. Investors are preparing for the latest CPI report, which will show the impacts of President Trump's trade war and will offer more clues on whether the Fed will cut rates anytime soon. Meanwhile, big bank earnings this week will offer the latest read into the health of corporate America and how the U.S. economy is faring amid the trade war. Let's get a deeper check. Let's get a check-in on stock futures now. A little bit more specifically, we're seeing all three major averages point to declines at the open of about 1/3% as we continue to get sort of this process of market participants trying to figure out how to price in the potential for tariffs. Let's, of course, talk more about all of that in much more detail here as we are looking to our top stories today, including President Trump threatening higher tariffs here, investors assessing trade risk, President Trump threatening higher tariffs on certain countries and regions, plus a big week ahead with CPI on deck and earnings shifting into full swing, plus Bitcoin hitting a new record high, topping $123,000 per token as Crypto Week kicks off in Washington. Joining me now, senior reporter Brooke DePalma live at the NASDAQ, markets reporter Josh Schaefer, and senior reporter Ali Canal. So Brooke, let's start with you. Walk us through the latest on trade and what all of this means for the markets.
Good morning, Julie. Certainly, we're seeing stock futures slip a bit here in pre-market trading on this Monday as investors really assess the trade risk here. Is this just another negotiating tactic by President Trump? And essentially, will this be a taco trade? Will Trump always chicken out? That's something that's become popular over the last few months. Or are we witnessing the beginning of a new global trade platform? Is this just the front of what could be that postponement to July 9th now hitting on August 1st? Will August 1st be another so-called Liberation Day Part 2 as we saw back in April? And sort of to get you in the loop on what exactly we heard over the weekend, President Trump will now impose a 30% tariff on the European Union and Mexico. Now, once again, this is for non-USMCA goods, so goods that essentially don't go along with that agreement, that typically excludes things like food, which tend to be more volatile. But we've heard from the European Union Trade Commissioner this morning that he will definitely do everything he can to prevent a super negative scenario. It's also worth noting here that starting August 1st, we'll also see copper face a 50% duty to match steel and aluminum. In addition to that, we also know that he has threatened a 35% tariff on Canada and a 50% tariff on Brazil. And so what experts are saying right now, particularly Ed Yardeni of Ed Yardeni Research, is that the stock market is expected to be choppy moving forward as traders really digest and look to understand how exactly all this uncertainty plays out. But many experts on the street still expecting that year-end rally.
Yeah, we're not seeing targets really come down in particular, although Yardeni did point out that they have been sort of shifting their target around as they've been trying to adapt to all of this. What about those Bitcoin targets there, Ali? It seems like they keep moving up. People keep piling in there.
Yeah, Julie, we were talking about $118,000 a coin on Friday, and the next debate was when we could hit $120,000. But here we are just a few days later, and we have that new record surging above $123,000 a coin. We are pulling back a little bit this morning, but there's just been so much momentum around crypto at large. We have Crypto Week kicking off in Congress. The U.S. House of Representatives is going to be debating a lot of policy frameworks that the industry has really been craving. We have buy-in from President Trump, who's called himself the crypto president. We've seen record inflows when it comes to some of those Bitcoin ETFs as well. And really, we've seen Bitcoin trade alongside tech, alongside the Mag 7. We have NVIDIA at a $4 trillion market cap. So it's really been risk on. And beyond that, strategists also say that Bitcoin has really gone through this resurgence. It's not just retail investors piling in, it's companies that are aggressively adding Bitcoin to their treasuries by the billions to have something else besides some of that dollar-denominated currency. And that can make their balance sheets look a little bit healthier when you have Bitcoin rising consistently at double digits. And really, over the past 5 days, we are up around 10%. And over the past year, we are up around 30%. So again, just a lot of momentum with crypto. And it's not just Bitcoin prices specifically. It's also those crypto adjacent companies like Coinbase, Strategy, Robinhood. They're all seeing a nice pop this morning.
Right. And speaking of those companies that have sort of become Bitcoin treasury companies, Strategy, to your point, coming out and saying that they've bought more Bitcoin, which, I mean, if it's a Monday, likely Strategy is announcing that it bought more Bitcoin. I'm not exaggerating. That's actually kind of how the cadence that they have been going with here. So Michael Saylor, of course, the executive chair, saying that they've bought just over 4,200 Bitcoin for about $472 million. Total here. So he's talking about the Bitcoin yield. So this is something that we know more and more companies are adopting. And the Crypto Week that we have been talking about, Ali, basically it's various pieces of legislation that will give more of a framework around crypto assets generally here in the U.S., and that has already proven to be a big tailwind for the cryptocurrency this year.
Right. The Genius Act, for example, that was a regulatory framework for stable coins, and we've seen how successful stable coins have been. The Circle IPO, for example, surging after it made its public debut. So when you have this buy-in from Washington, D.C., at a time when a lot of these crypto companies, crypto leaders have been really looking to D.C. to give us some sort of regulatory environment, I think that just bodes well in where we're at in the current moment. Now, I will say Wall Street has said that around August we could see a retest of these levels. So just something to keep an eye on as we continue to monitor prices, this meteoric rise that we've seen with Bitcoin. But overall, it just seems to be very, very bullish.
Yeah, that's certainly how the price action is showing. Josh, I want to get to you because, you know, we've been talking about trade and some of these assets that are not really showing the effects of what's going on in trade. Now, tomorrow, we've got a CPI report. And the question remains, are we finally going to start to see more of the tariff effect being felt in those numbers?
Yeah, Julie, so the answer from economists would be yes, right? We're expected to see a little bit of a tick up in that consumer price index for June. Economists expect that report to show prices increase 2.9% on a core basis, which would exclude food and energy. That's up from 2.8% seen in May, so a slight uptick there. But what's important here, again, as we always talk about with markets, is sort of where expectations lie, right? That's consensus. Consensus is expecting prices to tick up a little bit. So Citi's head of trading, Stuart Kaiser, pointed out, well, consensus is already expecting this pick up a little bit. It probably leads to no Fed rate cut in June, but at this point, the market's only pricing a 7% chance of a Fed rate cut in July. So at this point, that hasn't been some of the key things that's really backing this rally. So Kaiser sort of argues, well, maybe the rally can just continue even if the data get a little worse from here, because the data are expected to get worse. You can see this in something like Citi's Economic Surprise Index, which takes a look at how data is coming in versus expectations. So you can see on your screen here, right as we got into July, data has started to beat expectations, meaning the market has started to understand that perhaps the data won't be as good, and so the data is starting to come in a little bit better than feared, I would put it. Not necessarily great, but again, better than feared. And so if the market is ready for that reaction and things continue to come in this slightly not as good expectation form, some strategists like Kaiser are arguing that maybe it won't be that big of a problem for stocks.
Well, and of course, Kaiser's not the only one who is bullish here, right? I mean, take your pick almost at this point. It's getting more and more difficult to find bears out there. And Josh, another example of someone raising their forecast is Lori Calvasina over at RBC, who did that in a note over the weekend.
Well, Julie, I'll flip it on you a little bit, though, right? So Lori's new target that she moved over at RBC is to 6,250. Take a look at where the S&P 500 is trading on your screen, right? She's saying it's going to be flat over the next 6 months. And so essentially what she's saying is not that there won't be rallies, but she's projecting more chop. She pointed to the fact that momentum trade we've talked about a lot over the last month has started to slow down. So some of those high flyers are not necessarily leading the market higher. She pointed to, of course, the ongoing Trump tariff turmoil. That was something that Yardeni also pointed out. He felt like at this point, for his 6,500 target, we'd be past this Trump back and forth, and we're not. So I think really the feeling is, yes, maybe we get an end of year rally, but I'm not sure necessarily over the next month and a half on a tactical basis. Everyone's bullish right now. It seems to be a little bit of wait and see, at least until we start to figure out some of these headwinds and maybe get a little bit further into August.
Yeah, definitely. There is some consensus around that choppiness,
yes.
For example, even if some people are more bullish and bearish when all is said and done. Thanks, guys. Appreciate it. Brooke, Josh, Ali, thank you. Now time for some of today's trending tickers. We are watching Tesla, Kenvue, Synopsys, and Ansys. First up, Elon Musk does not want Tesla to merge with his AI startup, xAI. The CEO replying no on X to a user who made that suggestion. He says, open to a shareholder vote on a potential investment from Tesla into the AI startup, but he didn't give any details as to when this could take place. Musk's SpaceX, meantime, is planning to invest $2 billion into the AI firm, according to the Wall Street Journal. That is part of xAI's $10 billion debt and equity raise that Morgan Stanley announced earlier this month. That says the company looks to compete with OpenAI. Next, a C-suite shakeup at the maker of Tylenol and Listerine. Kenvue's CEO is stepping down, and board member Kirk Perry is taking his place as interim chief executive. The company has faced activist investor pressure to boost performance, especially in its skin and beauty unit. We're seeing those shares, by the way, jump in pre-market trading up about 6%, as the board says it's conducting a strategic review committee to look at various alternatives, including changes to Kenvue's portfolio. Reuters reporting last month that Kenvue is exploring the sale of some of its skin, health, and beauty brands. Finally, Synopsys getting clearance from Chinese regulators to acquire design firm Ansys for $35 billion. The State Administration for Market Regulation's green light comes with some conditions, including honoring existing contracts, maintaining agreements, and renewing contracts with Chinese customers if asked. Shares of Synopsys and Ansys are higher on the news. This was the last major hurdle for the merger, as it was already approved by Europe and by the U.S. The deadline to close the deal tomorrow, July 15th, but it can be extended to January of next year. You can scan the QR code below to track the worst and best performing stocks with Yahoo Finance's trending tickers page. Coming up, we count down to the opening bell on Wall Street, plus a conversation with Mohamed El-Erian. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. U.S. trading partners are readying a response to President Trump's recent barrage of tariff threats, including a potential 30% levies against the EU and Mexico announced over the weekend. In a piece for the publication Foreign Affairs, Queens College Cambridge President Mohamed El-Erian wrote that the U.S. has, quote, shaken the very foundations of the global order, adding that there is no trusted conductor to guide countries and companies through the complicated transition to whatever's coming next. Joining me now is Mohamed El-Erian. Always a pleasure to talk to you, Mohamed, and thanks for being here, obviously in what continues to be a very tricky time here. So I guess I would ask first whether you think we are witnessing a sort of remaking of the global order. It seems like there have been so many fits and starts. It's difficult to get that big picture.
So I think that we are no longer in a world of uber globalization, where we're looking for ever closer integration of goods and people and flows. The question is, are we in a world in which there is managed globalization light or total fragmentation? That's the question mark. And we're not going to know this for another few years, I think, Julie.
And I thought the other thing that was very interesting that you wrote in your piece is that the U.S. is almost behaving like a developing nation rather than its sort of global dominant status. What do you mean by that, and what are the implications of that?
So we're seeing market correlations that normally are more common to developing countries than the US. For example, the currency weakens even though yields are going up. That shouldn't happen. The negative correlations between bonds and equities has broken down. So you're starting to see things and you're starting to hear narratives that are more common in developing countries than in the US. And I think that that's partially because the US is trying to remake its domestic system. There's a real question mark as to whether this is a Reagan moment in which the US changes things with a view to a better outcome, or is this a Jimmy Carter moment in which the US ends up in stagflation and ultimately recession?
Which do you think it is, Mohamed? Or if we don't yet know, how will we start to know?
So first, let me tell you, the market is all over the place on this. We started the year with an 80% probability that this was a Reagan moment. By the beginning of April, we were below 50%. And now we're somewhere around 70%. So we have fluctuated a lot. And that is unusual for the US with its mature institutions and big diversified economy. I think it's a 50-50. I don't think we know. I think it will depend on how other countries react as well. So it's a 50-50, but the marketplace right now seems more comfortable than I would be with where we're going.
Well, I wanted to ask you about that because what do you make of the extreme equity resilience here in the US in the face of all of this back and forth?
So I think there's two things going on. One has to do with the view that corporates aren't the sovereign, that you may have issues with the sovereign, but at the end of the day, US corporates are strong, good balance sheets, good innovations. That's one view. The other view is that people ultimately think that the US is escalating to de-escalate. That what we heard over the weekend against the European Union, against Mexico, is negotiation. And come August 1st, one of two things are going to happen. Either we're going to push the deadline out yet again, or the US will get what it wants from its trading partners. So the markets are pretty relaxed about this, more relaxed than I would be, but I understand that is the trade that has worked over and over again, and you don't want to get in the way of something that's been working.
Mohamed, as we and our viewers know, you are a longtime veteran, very well-known investor. What they may not know, you've also served on a number of corporate boards. You're currently on the board of Under Armour. So I'm not going to ask you specifically about those businesses, but I am going to ask you about that experience with these corporations and how they're tackling this current moment and how challenging or not, maybe, they're finding it.
So most CEOs I know will tell you that we are in a wait and see, Julie. We're waiting to see what is going to evolve. And that's important because it impacts your supply chains. It impacts how you think of where your markets are. So whereas the financial markets seem comfortable, what we're seeing on the CEO side is postponement of major investment plans, just waiting to see. It makes a huge difference whether the tariffs are 30% or 10%. It makes a huge difference whether the tariffs are volatile or whether they're going to be fixed. So companies are doing what most people would do is, you know what, I'm not going to commit multi-year investment funding until I know what landscape I'm operating in.
So the markets, of course, about this acronym TACO, right? Trump always chickens out, that the markets seem to have adapted to some extent. But when it comes to being a corporation, you can't really, I guess, bet on that kind of acronym, right? But I mean, do you think the markets ultimately were wrong about TACO, or do we still not know how that's going to play out?
So the markets were right in saying that the deadline will be pushed back and will be pushed back again. That's correct. What we don't know is ultimately what the destination is. So the journey has been consistent with a much longer time frame than what economists were afraid of. But we still don't know what the destination is going to look like. I'm hoping that we are going towards some sort of globalization light that is managed more, that the US feel that it's trading in a fairer trading system, that it no longer is responsible for so many public goods that are really expensive. That's what I'm hoping we're going towards. But we could just as well end up in a fragmented global economy. And for companies, what you're going to hear, for example, under Trump 1.0, we went from this notion that China can be your market, China can be where you have supply chains. Do you need C+1 or C+2? One or two other countries to increase your resilience. Now you hear C plus many, and some companies don't even want the C, they just want the many. And that means rewiring your supply chains. And that's not something that you do quickly. It takes time to do so, and it is expensive.
I'm glad you brought up China, because I know there is some strategists have speculated out there that part of the reason that the market hasn't reacted more to the tariff headlines is because they haven't involved China lately, right? Most of the focus has been elsewhere, and China is the big elephant in the room, so to speak. Do you think there's any truth to that? And what do you think we need to watch for when it comes to China headline risk?
So we know from Mexico, for example, that if you're not in focus today, it doesn't mean you're not going to be in focus tomorrow. I think Mexico was surprised over the weekend to hear about the possibility of a 30% tariff. They thought they had sorted that out. So I don't think China is out of the woods. I don't think anybody is out of the woods right now until we settle this tariff issue. But there's a broader issue with China, which is how quickly will it reform its economy. China right now is no longer a locomotive of global growth. In fact, the concern, and we saw the export numbers today, the concern is that China will start dumping its exports on other markets, especially the European Union, which will cause trade tensions there. So keep China on the radar screen. You cannot ignore it right now.
Mohamed, finally, quickly, since you mentioned the EU, the bloc says it's preparing a response, but it's willing to continue to negotiate. In the meantime, there's some reports that the EU might be looking to other countries to sort of form some alliances. What do you think of that? And do you think that the EU Europe generally, the stock market has been a good investment this year. Do you think that continues as a result of their positioning?
So I think the European financial markets are benefiting from the fact that the whole world was massively overweight the US starting this year. The US had outperformed other countries consistently. The US is where the major drivers of innovations are. And the US has a fiscal policy that's quite loose. So there was reason to invest in the US. During the year, what you've had is a realization that overweight is excessive. And that's why European markets have outperformed US markets so much in the first quarter by 17 percentage points, Julie, 17 percentage points. I think that for the outperformance of Europe to continue, Europe has to get its act together. It's one thing that having capital pushed out of the US back into Europe. What Europe really needs is to be able to pull back, attract the capital back. And it hasn't been doing enough for that as yet.
Very interesting stuff. Mohamed, always a pleasure to talk to you. Thank you so much. We really appreciate it.
Thanks for having me.
That does it for Morning Brief. Opening bid next on Yahoo Finance. Keep it right here.